This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. Looks like Janet Yellen's comments yesterday were supportive for stock index futures. So we did see some good gains yesterday in response to that, and some follow-through strength today. In fact, we do have the S&P 500 cash index now trading at a historical high. And it looks like futures are not that far behind, also closing in on new historical highs. So nothing really changing in our long-term view for stock index futures. Still believe the main trend is higher, and we still believe that the Fed will be very slow to raise interest rates, even though the consensus view now is that the Fed will raise the Fed funds rate sometime in the middle of next year. Our feeling is that it will be much later when the Fed is able to increase the Fed funds target rate. So look for more of the same, more strength likely ahead for stock indices. Over in the currencies, seeing the dollar index again having some trouble. Looks like the 80.50 to 80.75 resistance is holding. The dollar index, you would think, would be stronger with all of the tapering from the Fed's quantitative easing, and yet the dollar has very much underperformed. So that tells me that the main trend is still lower for the US dollar index. Also, we are seeing a little pressure in the British pound. We had some UK manufacturing numbers coming in a bit on the weak side. Also a little pressure in the Australian dollar after several gauges of Chinese manufacturing activity came in on the weak side. So once again, I would focus on the dollar index, looking for lower prices. Over in the interest rate markets, we are seeing a little more pressure. We did see some new highs for the move in the middle of last week, especially at the long end when the June 30-year bond futures penetrated a double top pattern at the 134 level. So since then, a couple of days of setback, but I think we are now low enough where we will find some renewed support. And from here, I think we can see higher prices for treasuries, especially at the long end, and I think the long end will gain on the shorter end of the curve, but the overall interest rate complex is likely to work higher. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.